Afternoon, Trader Tim from eMiniMind.com here. Going to take a look at the E-mini S&P and go through some of my trades from today. That's the Thursday, the 4th of October, and we had the big sell-off today relative to what we've seen. But the first thing I want to point out is in today's daily chart here on the left, earlier in the week, I was saying how my bias, you really couldn't help but be bullish until we broke this swing low at 29.0775s. And not too long ago, we saw a similar situation where we had a bigger day down, but then we rallied into the close. And notice where we closed here, just on top of the 50% retracement long. And so that may be enough to shake some people out of the market, and maybe enough to kind of shake things up just enough so that if the market does get moving to the upside here, that another sort of chase rally starts to form. So we'll see, what happens in the tomorrow, Friday, but then in the next week or two. Overall, the trend is still intact. If we look at some of these swing lows, you can see the blue line here, my channel that I have drawn. We're still only right in the middle of that trend, or of that channel. So, things are still all right. There's no reason to get overly concerned. But this break of a swing low, that's the first time we've seen that in quite a while. The last couple of months. So. I'm a little bit more cautious on the daily time frame, but intraday, really nothing's changed. I went in today with the same sort of sentiment as I did the rest of the week, where Monday and Tuesday were kind of slow to get trades going, so I waited a little bit longer before placing my first trade, and I kind of took that same approach today. And we'll talk about those here in a minute, but I wanted to talk about a trade from yesterday first. If I go back to Wednesday, which is here, we had a situation where here's the open, this dotted line, and then we formed a range in the first 30 minutes. We had the high of the first 30 minutes and the low. And then we broke out, and things were looking pretty good. But then we got a high tick that lined up with the high price. And so when we sold off, I was looking for a short, and it's really nice that this short lined up with the top of the first 30-minute range. For those of you who tune in to the Tuesday live trading room, we talk about this a lot. The top of the first 30-minute range or the bottom of the first 30-minute range, once they're good places to act as support and resistance. And so in this case, once we broke down into the first 30-minute range after we had been nicely above it, then looking to short when we returned up to it and expecting it to go to the other end from the top of the range to the bottom is kind of the trade setup there. So I shorted here at 41.25s, and it wasn't too long, a couple of minutes, and then we started to get that sell-off to the bottom of the range, traded right to the target, and then we got a low tick down at lows. And so I used that as my signal to close out the position. We had some other support down here from these prior day of trading, and the last couple of days of trading. And so far this week, I really hadn't been seeing a lot of follow-through. Like, we wouldn't have a setup, trade at the 50, trade down to the negative 23, and then another setup, trade at the 50, trade down to the 23. We're getting a lot of like one, maybe two retracements in a row and then reversing. So I used that low ticket lows as a signal to get out of the rest of the position. I took some off, half off at the negative 23, and then the rest off at that low tick. So I want to talk about today, and if I scroll over to the morning. So here's the gap down, and at the start of the day it wasn't super clear that it was going to be a trend day. But with gapping down and then forming this first retracement, we traded down to its target. But notice how we got close, and then we bounced, and then we got just about to it, and then we bounced, and then we traded just through it. And you could draw up another retracement here when we got close to it. But going into the day, I said to myself, okay, I'm going to be patient. I'm going to wait that first 30 minutes instead of the first 15, because the market this week, the pattern has been to like get going a little bit later in the day, and I didn't want to take a couple stop outs right away at the open and then not have any bullets left to take later in the day. So one thing that I will do, in this case, I've got the 30-minute high drawn at 24s and then the low drawn down here at about 1650s. And so the first 30 minutes were up, and as soon as we broke down, we traded below the first 30 minutes. We rallied a touch and then sold off again and broke this swing low. I'm okay with taking the swing high just before the break down to lows, such that this short kind of put us at the bottom of the first 30-minute range. So rather than saying, okay, well, I'm going to wait for the market to come all the way halfway back, it's not as likely for that to happen if the market's starting to accelerate. And so I'm okay with taking these setups where rather than going from highs down to lows, I just take the recent swing high down to lows, and it's the recent swing high that was just above the first 30-minute range for a short. The same thing could be done for a long, a swing low just below the first 30-minute range, so that the entry lines up right about with the 30-minute high or low. So let me walk you through this trade. It got a little bit crafty, if you will, but let's go through it. So I shorted I shorted here at the 1575s, and then once we broke this swing low that I was using as my anchor point, then I moved my stop from -6 to just above this candle, 16.25. So I essentially tightened my risk, tightened my stop. I didn't reduce the risk entirely, but I reduced it some. And then once we got to this 14s, I took a little bit off. Let me back up here. There we go. So once we got to the negative 23% target, I only took really a quarter of the position off, because I was kind of anticipating that maybe we could start getting into some sort of trend. We were gapping down, and I was thinking maybe we would double bottom here at 2900s. So we were at 2916s, and I was thinking, well, maybe if I can hang on and the market sells off and rips down to 2900s, I can ride that move out. Maybe this will be the sell-off that takes us there. So I didn't want to take normally I take 50% off at the negative 23, but this time I just took a quarter off. And then we sold off a little bit more, had a little bit of a bounce, and then sold off again. And so I moved my stop to, on part of the contracts, I put it above this swing high. And then on the other, it was like 50-50, then I put it above the developing 61.8. So I put it at 14.25. And the reason I did that was because this was only a couple candles up, and then we sold off, and I didn't want to be so aggressive that this kind of thing might happen where you come up and you get stopped out of this swing high. I was thinking, well, if the next setup holds, that's going to be above my stop. So I split the remaining contracts up and put half here, my stop on half of them, and then the other half I put above here at 14.25. So I got stopped out of the remaining half here above the swing high, and then it kind of moved sideways for a little bit more. And then as we started to move down again, we moved lower here, and what I ended up doing is I drew up this retracement because we had took out the swing low here, and I added a couple more contracts on at 11 and a quarter. So we sold off, we broke lows, we bounced. I put a couple more on here because I had already taken, by that point I was like 2/3 out of the position, and we were only at 2011s, and I was thinking, okay, well, with this kind of momentum, maybe we'll get to 2900s. So then I added to the position. So if you only had one contract, you're kind of stuck going all in, all out. So taking, one of the setups, like taking this setup here, and then taking it off at the negative 23% target here, then you're stuck, you have to get back into the trade either at 29.13s or at 29.11 and a quarter. So, those are all good entries, but if you've got multiple contracts, you don't have to worry about getting back in because you're scaling out and you're still in the trade. But every once in a while, I'll use another setup as an opportunity to add some contracts if I already am in the trade. So that's one of the things I did today, and then I just left my stop at -6, and then once we sold off, like we broke by a tick here, and it was really quick, so I just left my stop at -6, and then when we started to bounce like this, I moved it to just outside the 61.8, so I moved it to 1250s, so it was like just right up here, and then we were able to, because I noticed here we had like a retest. We traded at the 50, we sold off, and we traded at it again. So I didn't want to get too aggressive with my stop. I had just put on the position, or I just added to the position rather. And so, leaving a little bit more wiggle room. I was already profitable on the trade, and so I left my stop above the 61.8, and then we got another leg lower here, and then I put even though this was only one candle, I moved my stop above here because we had traded at 29.05s, and I was thinking, well, maybe we'll get to 2900s, but hey, we're already at the support here, and this low 29.0550 was just below the prior low here, so I thought, well, if we dip in by just a point or two, we're trading at the 50, and that, then we might get some more buyers, and that might give us a double bottom here and send us higher. So I eventually got out of the trade up here at 775s. So kind of a little bit different way of managing a position today, but a very good, different type of day than we've seen in the last couple of weeks. And so it's nice when you're going through your trades, go back, compare today to, say, like the 21st, the 20th, the 18th, the 17th, compare the trend days to each other, and then compare the range-bound days to each other, and then you'll start to see some of the characteristics that might be similar between both of those. And then as a day like today starts to develop, and you say, well, where might be the stopping point? Okay, 2900 is a big round number, and 2905 is a prior 50% retracement. Let me see if I can get in a trade and try and ride it down to one of those levels. And so I didn't, catch the next leg down because we started to bounce, but I was able to catch a portion of the move. And when you get to minimum of 2 contracts, you can start doing things like scaling out that really end up helping in an exponential way your profit factor. So I hope that was helpful and a little bit of insight into how I manage a position and how I kind of use the prior couple of days as a way to sort of set my bias for the day and set the tone of, do I want to jump in a trade right at the open, or do I want to be a little bit more patient and let things sort of settle out and then look for a trade to occur a little bit later in the morning? And remember, just because the market gaps down and moves down, it doesn't mean we can't move lower. And so down here at 28.75 and a quarter, that's the January high. So if we were to sell off in the next couple days, we still have room to go lower. And if we were to move higher, well, yes, today's high is a 24, and that's a ways above us too. So even though the daily chart might not be trending or doing a whole lot, these bars are very topping tails and bottoming tails, spinning tops. Even though the daily chart might not be doing a whole lot, there's been some good setups intraday, and you just have to be patient and not get overly excited at the open and kind of let things unfold and let your observations take hold. So I hope you find that helpful, and I hope everyone has a great weekend, and we will talk to you again next week.